Kevin, it's Kerry. This is for Monday, March 11. I didn't devote as much time today as I wanted to. My son hurt his back snowboarding, not seriously, but he did get a compression fracture, sat in the ER for a couple of hours. But he walked out. We went and had dinner. He's going to have to get an MRI, blah, blah, blah. He was snowboarding in the backcountry today with some buddies and went over some cliff. Anyway, so it took up a good part of my afternoon. But what I'm going to do with this particular video, and I understand this is a work in progress, and I don't want you to be shy in terms of telling me improvements that need to be made or additions. One of the things I see here, obviously, is that this is a mislabeled chart. Unless you look upper left, way up here, and I hope you can, this is the wheat active weekly continuation chart. But what I'm going to reserve this video for Monday, March 11th are the ones and the twos. We'll just lop them together, and then we can decide which are more ones and which are more twos. This would be considered a one. I forgot the exact terminology, but it's sort of impending action, actionable in this very moment. You can see, and this is a weekly chart, so 430 and a quarter to 435 and three quarter. That's our range of support. That can absorb selling through spring, and in fact holding above this area now that we're testing it. I am expecting recovery over the next several months or sooner into the low $5 area, 505 to 519 right now. On the other hand, if we close the week below 430 and a quarter, and I like to see by at least a 1% margin there, which would take us another 4 cents, puts in the upper 420 or the mid 420s. That I've got 386 and three quarter as our 2016 low. I'm not necessarily expecting a double bottom there. I think we could bottom out for a week, two or three, but I think ultimately this market could continue into the double channel extension down in the 250s. There's a lot of historic precedents for this area, by the way. So this is actionable. This is May wheat. Just emphasizing that this is the weekly continuation chart. You can also follow this in the newsletter itself. So I'm going to do newsletters first. There's only three markets that I see right now. Crude and the unleaded gas are the next two. So let me jump into crude oil right now. And you can see this in newsletter as well, 5409 to 17. This is a pretty well-defined support here. Both speed line and channel bottom can contain weekly selling pressures. So if we get down to this area in the next day, two or three, this is a good trigger pulling area. Inversely, if we settle below it, it's a good reversal area. So holding above 54.17, expecting the 61 handle still over the next week, two or three. And if we close below this area, then expecting the 45, 46 handle over the following week, two or three. So this is pivot point area. That's crude. And finally, with regard to the newsletters themselves, let's do the unleaded gas RBOB. And you can see I have an ascending channel top here. This is also what I like about this. It's not so much about this formation here at 1.8488. It's that it's in close synchrony with the weekly formation, former long-term channel bottom at 84.57. So this 1.84 and change is our ceiling. I do recognize we've been in a pretty strong run up. Actually, most of this I do believe is rollover. Now that I'm going back to memory here, most of this rally was a rollover rally. It was a false rally. In fact, let me go back to the daily chart here. And yes, it's just been a kind of a gradual run up. So this is our ceiling. And this is an area that can absorb buying, say, through spring. And, once tested, at least 52.23, quite possibly this low area again over the next several months. Now, if we close above this 84.57 at the end of the week, then I've got 2.16 and change. 2.1642 is the low of the move high. That would be kind of, and you can see you've got some highs here at 1742 and 1500. So I'm kind of rounding it at 2.1642 as our target area. In fact, I'll even put a trend line there so you can see that as our objective, 2 to 3 month objective if we settle the week above 84.57. So we're getting next to what I call a midterm pivot point right now. So that summarizes the newsletters. And as far as the non-newsletter markets, I got 1, 2, 3, 4, 5, 6, 7, 8 of them. Most of the stuff that we're covering is worth looking at. I'm just going to go to the Canadian dollar first and foremost. The last few days, we actually settled below. Let me go ahead and zoom this in. We've got this channel structure tomorrow at 75.04. Let me see if I can type that out there. That's 0.7504. And I'll just put that there. You can take a look. That's that channel bottom. It's also consistent with this old low. If you can see at 74.85 and 75.01. So this whole area in the upper 74 handle, low 75 handle is our ceiling now that can absorb buying through March. And in fact, below which, wouldn't be surprised to see that, that 73.30. You can see as that low. So, we could be a week or two from there. I don't see anything golden about this low. And in fact, I think this violation could quite easily yield something, similar to this, which takes us down into here. So I see this as pretty good short setting area. If we get up and over it, then you do need to liquidate and could consider going long, although I think that would be a tough row to hoe to go long. I think just getting above this would be enough to just neutralize, don't go long, don't reverse, because you certainly can get hit in some areas. But holding below this, we could get out into the 72 handle here over the next 3 to 5 weeks. And let me go ahead and condense this once again so that you can see that if we do settle above 75.04, are we going to get a run all the way up into the 77 long-term resistance handle? I don't know. Anyway, so there's the Canadian dollar. I think I've already said that enough. Let's move on to the euro currency. Euro currency is now testing. I think I'd mentioned this to you before. We've got a longer-term Fibonacci retracement at 1.1212 that we tested last Friday. If we close below it, this market continued heading south. As I mentioned before, we already remain bearish below the 1.1505 formation, so we could get short up here or get short with a settlement below the 5/8 pullback. You're going to get caught in some old trouble spots here. And you've got them here, and you've got them here all the way down. You've got these little old lows where the market could get snagged for a week or so. But I think ultimately, if we close below 1.1212, then we are that low, 1.0374, is likely over, say, by the end of April, perhaps, okay? Until then, holding above 1212, we're sort of playing ping pong still between it and 1.1505. And that completes the euro currency. I'm going to call this a 2, by the way. I don't think it's, I don't want to get too antsy to trade this particular one because there's nothing classic about it. Let's take a look at the British pound. The Canadian dollar, though, I think is actionable. I'm skipping the yen because there's nothing to do, trust me. The British pound, this is a 2. This is an area 1.2831, this ascending channel bottom. Now, we've had here 2 settlements in the course of a week above this channel top, and the market does not want to follow through. This is definitely considered, well, should be considered a bearish sign. But do you really go short here? I don't think so, because you could easily bottom out at 1.2831 here. This is a weekly chart, by the way, of the British pound. You could easily bottom out at 1.2831 for the week, and then, set yet another settlement above this channel top over the next several weeks. I think, though, if we settle in the next week, let's say Friday, below 1.2831, this is a market that's likely to continue south. You've got this low here at 24.93, but I really think it's this low area in the 1.2093 to 52 to 93 area. This is kind of what we're looking at as the realistic target, that's about as far as I think I would go with that, but of course you've got this longer term potential here, and I'm not even going to say that that's likely. Following a settlement below this short-term structure here, are we really going to get down here? No, I don't think so. But I do think that a retest of this, this low area at 1.2052 is quite possible if we settle this week below 1.2831. Until then, I also don't have a problem buying 1.2831, although I think you need to watch it. You need to maintain a fairly tight stop. But I do think this is an area the market could round back up again in the coming weeks. This begs the question, as to what our trading style is. I know we've talked about long-term protracted moves, ideally, of course, but are we also looking for the 2 to 3 week pop? Are we also looking for the 2 to 3 week sell-off? These are questions I think that deserve to be answered. Are we going to occupy 1 or 2 different time horizons, mid and long, or are we just looking for like big picture stuff? Let me move on from the British pound to gold. Gold, actually, we came very close to testing this channel bottom I mentioned I think in the last video. This structure was at 79.4 and the low was 80.8 that day. Now we're fussing with this 1/3 speed line, which is consistent if you take a look with some of these old highs. I'm not going to get to these exact numbers. So we're kind of farting around here right now. We have this sort of potential head and shoulders formation thing developing, but holding above this 1281.6, which is exactly where this channel bottom is on Monday, does maintain an upward structure. So as I said, following a test of this, we certainly could rally into the 1320s, even 1330s, say into April trade. So that's still true. On the other hand, a settlement below 1281.6 rising daily. On Tuesday, it'll be 1282.7. On Wednesday, 83.7. I'll keep us updated on this. That would have the opposite. The market then should continue south into the 1230s, where it could readily bottom out, say, well into the second quarter. So that is gold. We've got a few more here. We got 4 left. This is already an 11-minute video. I hope YouTube can upload this. I'm sure they can. So on to silver. Silver, similar is structure. It almost looks like the British pound in this respect. You get this ascending extreme channel bottom, which is at 14.901 for the whole week ahead. And this is also consistent with these highs, 14.92, 14.95. This is a support region we actually came close to on last week. 14.985 was last week's low. So this is our floor, and we can actually bottom out here and head back up to this channel top here, say by the end of April. So I consider this a 1 right now. Silver is a 1. I'm eventually going to memorize all this stuff, I can assure you. It'll only take me a week or two to memorize which are the hot markets and which are not. I'm trying to remember right now. I'm going to go back to gold real quick to see, because I've already kind of forgotten. Oh, no, that's right. Gold and silver, very different structures, but they're testing support, as we speak. So let's go on to copper. I do like copper. I'm calling it a 1. We settled above this horizontal formation, which on Monday is 2.8598. And holding above this area, which can absorb, selling through March, the next several months could certainly yield 3.2975. If, on the other hand, we settle back below 2.8598, well, first of all, you would certainly want to get out of your long position. Do you go short on that? I think you could ever so cautiously, because this is such a classic buy signal, this horizontal formation. Settling back below it, I think we could easily get back down to this triple bottom back down on the 2.55, 54 area following a settlement back below 2.8598. But until then, this is a floor of support above which the 3.20s really expected over the next several months at the very longest. Bond market. I'm calling the bond market a 2. But it's worth watching. These are weekly structures here. This is big picture right here, 149.14, that if tested over the next several weeks is sort of a golden resistance area that can absorb buying through the second quarter. And once tested, the market prone to bearish rotation. So this is our significant pivot point above the market. Intermediately, we do have some of these levels. I'm going to just do the extreme one this week at 147.20. You can see that again. I'm going to put it here at 147.20. Do you sell that? I don't know. I'm not comfortable with it, to be honest with you. Descending flag, generally a setup for a bullish move, but really 149.14 is our pivot point. Now, holding below 149.14, this market can quite easily slip back into the 140.05 level. So finishing with the whole 2 concept on the 30-year, I say wait for 149.14 because there's not a whole lot to do in the middle. I don't want to get caught in any 1 to 2 week trade scenario. I think you would agree with me, but just know that holding below this market remains heavy into later year, and the next stop to the downside is 140.05. If, on the other hand, we have some bearish economic news and we settle a week above 149.14, this is a beautiful buy signal to go long for the next several months into the low 160s. And finally, NASDAQ is also a 2, the NASDAQ 100. We've got a key reversal high here. The NASDAQ, I always like key reversal highs in the NASDAQ. Here's one here. The S&P not so much, but the NASDAQ, the 1999-2000 high was a huge key reversal high on the weekly chart. But in any event, we have a key reversal high, but we do need to settle the week below 70.37 3/4 to sort of keep this bearish ball rolling to the downside, where I would expect a 64.02 to 49 region within 2 to 3 to 5 weeks, somewhere in there. So this is sort of a close watch situation, NASDAQ 100. If we close above 70.37 and 3/4 on Friday, there's no reason to go short this market despite this key reversal. And certainly if we settle this week above 71.59 and 1/4, that's the high settlement price, that would be a complete negation of that key reversal high. And I actually think that would be a decent go with buy signal. So let me go ahead and let's see, the high close was 71.59 and 1/4. No, that's the wrong. Sorry, I'm not going to fuss with this. I got about another 30 seconds here. Close 71.59 and 1/4. Close above at the end. NASDAQ at the end of the week, bullish. Close below 70.37 and 3/4, bearish. It's a number 2. I'm not all that excited about it, but it's worth at least watching. And that's a 15-minute video, Kevin. Hope you stuck with the whole thing. Our morning videos, if I cut them in the evening like this, please let me know room for improvement. I could label these charts better, but they are all upper left anyway. I do need to get more methodical with our 2s and 3s and so forth and so on. But at least you've got sort of what I see as hot right now. And it's definitely a topic for conversation in the morning. If we could maybe talk in the morning once you've watched this and think of ways in which I could improve this. Otherwise, I think we're moving in the right direction, and I will talk to you soon.